The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you had a good 3-day weekend there. And I'm in North Carolina still. Haven't left yet. Plan on going to see Tom now, not this week, but Sunday. Had to take care of quite a few things here in the mid-Atlantic. And I was going to leave from Asia from there. But we have a lot of snow, and it's supposed to be less than zero here in North Carolina by Thursday. So that's a big event here. And I don't know if I call this snow right now. It's about an inch or two layer of ice. Somebody on the den was saying they got 8 inches in Chesapeake, which is, I know where that's at. It's north of Duck, Nags Head, and all that kind of stuff down at the coast area. I like that area, Chesapeake. Really nice farmland up there. Really nice farmland, actually. All right, so let's get right into the S&Ps here. And just do a little bit of review here just so we can kind of move forward with it. If you've been watching the show, we use metrics on our scanner, our breadth indicators, to try to block out one side of the marketplace. And when we got near this 2052 area, we talked about, and that was a big move up. We talked about don't start buying the breakout immediately. We just moved up about 5%. Talked about waiting for another breakout. We're going to probably have some rattling around areas right here, but I wouldn't be shorting below this 2052. And then we closed above, retested it pretty much to the tick, moved forward. Breadth had been staying positive all along the way here, especially on our long-term view. Our dailies crossed over again about right in that 2027 area. And we also had our navigator just going into a zero line, just to give a little bit of history here. So we've made pretty much all-time highs. We closed above all-time highs. And what we want to do now is just try to figure out what we're going to do to the right of the chart instead of looking at the left of the chart. So we talk about using the 240s to regulate the trade up all the time. If we're looking at longer term views, we always look at the inflection points on the shorter term views to try to get some edge and try to regulate the trade. And that's been pretty much the MO of this move up too. So right now you've got resistance on a short term at 2093.65. You've got support at 2082.85. And what's the edge now? The edge right now is literally this thing's, in my opinion, fundamentally got Teflon on it. And technically speaking, and I'm looking at these technicals right now, looking at our scanner, and I'm looking up our charts here. This is our daily chart on our breadth. And I'm going to pull this up and let's get rid of that. And are we at extremes on some of the breadth extensions here? Possibly, but if you're going to look at this market from a turnaround standpoint, you got a couple of things you need to look at, technically speaking. One of them is you need to start seeing breakdowns on the 240s, which haven't happened. And, God bless if you can pick tops or bottoms in the markets to the tick. But, I always talk to folks about trying to get some confirmations that we have started turning directions from one way to the other and starting to have some technical damage. Now, that coupled with the breadth situation, it's just not happening right now. And what we want to do here is look at our dailies and understand that we've got no new inflection points to pay attention to on the intermediate or the long term. This is our weekly. We did have a close last week above that 2071.75. We talked about that was going to be very powerful, along with the breadth still staying positive. And again, what do you do now? I think now you still cannot. There's one glaring piece of information. You still can't, from a technical breakdown standpoint, you can't start playing the short side yet. Now we may, after this show today, we may drop 500 Dow points. All right, anything can happen. We could rally 500 Dow points, but the crux of what I'm trying to say is if we're going to drop 500 Dow points, and Logan said, hey, it's not time to short yet this morning, you're going to get some new information during the day to key off of, and some breakdowns that are going to be happening below some of these levels that we talk about, i.e. namely 2082.85. But if these breadth statistics don't turn, then you really are kind of fighting against a long-term trend up at the same time. So again, any shorts right now are to be looked at as short-lived plays, and any long-term support areas that are met are actually supposed to be met in theory by buying. So that's the take. There's this is kind of the ether up here, because this is uncharted territory, and we've kind of come up into, I don't have to tell you guys, we come up into, some recent all-time highs, and we've also eclipsed those, and we've also pretty much satisfied meeting support on a long-term basis to the tick a couple of times already. So that's the take on the S&Ps, and the numbers that you can kind of focus on if you need them are in the scanner. And I'll pull down to, I'm just showing currencies, futures, and ETFs right now, but going to the S&P minis, got a lot of green across the board there. And here's the levels that I just spoke of, this 2082, 2093, and this is the level of the market. And this is a really neat, I know I promised you guys real-time charts. I've been told that they're going in today. And again, these are technical things that my programmers I'm ready to kill them, but they kind of promised me that they're in beta right now. So we're trying to work all that out. So you'll be able to get a real-time bar chart snapshot with the levels painted on them for different time frames as you hit any one of these cells. And that's kind of cool. Let me just read some notes here. Okay. All right. Just to give some NASDAQ profits, because we're kind of finishing up a weekend here. I'll just give you NASDAQ levels, not profits. 42.10, nothing's changed there. No new levels above on the NASDAQ. This is kind of a let the 240s regulate the trade up. You got big time support or not big time, but short-term support, at 43.44, 43.45. That's going to be kind of the pullback buying point, and stops oriented below. Okay, we're going to take a look at some of the usual suspects. We're going to get into some stocks I was supposed to get into last week. Today, some stocks that had not really been satisfying their earnings forecasts, and what do you do with those things if you own them? We're going to pull up a couple of those things and try to help some folks that might be stuck in some bad situations. We got to look at crude oil really quick. I still like that XLE trade relative to this on a buy side. And we talked about not nibbling on this till we got back above 5104. I still like blocking out the short side of the marketplace for this thing. And here's our long-term inflection points, 51.56 down to 51. That's a big kind of DMZ, if you will. And we closed above there last week, and we're just kind of rattling around above there right now. But that's it. That's the cool news, is you can orient stops around that. I'm going to pull up the XLE really quick here. We haven't opened this morning, have we? 82. Let me see if this is real. Yeah, just printed 82.20. All right, so we talked about this 80.07, and we talked about buying it at 74.18. So we talked about not shorting against this inflection point, and we also talked about putting some trailing stops in, because we thought this might compress around and then just blow through here. Well, that actually happened, and this has been the relative strength relative to crude oil trade that's been kind of neat. And now we've gotten above recent upper highs. We've had the technical damage that started. We kind of got in a little bit early around 74.18, had that close above, rattle around, meet those targets at 80, and now we're just traveling above. And I've been a fan of just hanging on to this thing, because I thought, crude oil was more than likely, if it moves sideways, this thing had a chance to go up. If crude oil moved up, obviously this thing has a chance to go up. If crude oil moved down, the XLE may just kind of move sideways. Low risk trade, and I still kind of feel that way for the XLE. And some of the stocks in the XLE, as I come in here and look at, select none, XLE, Wow, sea of green. All right, but I know that doesn't help you at this stage if you've not been in these things. But what we can do is take a look at some of the ones that are sitting on inflection points and possibly Devon Energy, DVN, EOG Resources. Some of these the train has left and they have moved significantly. Valero, wow, been talking about that. Let's look at Anadarko. That's the one that's, all grains too, APC and VLO. Let's look at those really, really quick just to kind of give you an idea. APC. And, this was one where it was kind of like very XLE sympathetic here when crude oil was making new lows and the XLE wasn't. And then Anadarko actually was even relative strength higher. We looked at this 76 area as a really good launching pad for this. And we are 25% higher in a month. And that's the kind of rubber band extension type move that we were talking about, that these things had just been spring loaded on a relative strength basis. Here's the daily, and there's that pullback to 77.77. And these, again, on by the way, on Bloomberg, on the charts there, we kind of have these boxes in a dynamic movement fashion. When we have an orange bar there, we don't have orange bars on Bloomberg, so they kind of shift around. What we did on the other platforms, just to stop confusion, was to say, hey, look, we're going to have a new box more than likely up here. Let's have an orange bar, and then let's print the profile directly afterwards. And this profile was printed and in force when this bar started, so this is not cherry picking. A lot of these indicators that folks put out there, they kind of repaint backwards sometimes to make the historical picture look good. That's not the case with what we put out. APC trading about 90 pre-market, and again, the 240s regulating the trade up and allowing you to use that almost as your trailing stop situation. Okay. All right, let's take a look at VLO really quick, just to man, what a relative strength trade. My God. What is that? Is that a 30? That's almost a 30% move in the stock in the last month. All right, well. The recent breakouts are 54.87. I mean, what do you do now with this thing? I think you can't buy this up here. You got to have some new profiles up here, especially on the daily. Get some new defined support areas and try to buy this on a pullback, which is obviously not the case at this stage if you weren't in this from the beginning. We'll be right back, folks.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. Excuse me. Looking at the dollar right now, 93.67, that big support area, that's where you can orient stops. That's all I wanted to say about that. This is kind of the long-term trade. I've been just kind of focusing on big-time supports around 90. Let's just call it 92. That being said, let's move right into the euro, because obviously that's very relative to what's going on with the euro. And here we go. 114.47. All right, that's the big focal point. And we caught a good move off that the other day, and that was going right down into the projected lows around that 112.45 area, which I think that hit it almost to the tick, 112.70. No, not to the tick, but we're still in that range. And the euro, as we know, fundamentally speaking, this may have some more downside to it. They're trying to obviously do some tricks there, but all those tricks are pretty bearish for the euro in general. That's where we got to orient stops. And is this a good short at this stage? Turning the rents the same way. If it ain't broke, don't fix it. Do I think that's a decent short? Yes. Is the dollar sitting around support right now? Yes. So with the odds as they are and the edge, so to speak, this may not be a terribly bad situation to get into, but the good news is you can get stopped out relatively quick above and continue to play that game. And if we have daily closes, by the way, in this profile, then all bets are off for a little while, just like we were here, and that was a pain in the butt little situation back there. But again, the leverage is on the short side still when it comes to the euro, and nothing's changed there. And that's been a heck of a ride down from 135.52, and just to do a little, good Lord, looking back, yeah, just to do a little review, this was the reason. And I don't have enough days back to create the profile, so I only got 300 days back. So we'll look at that later. Yen, talked about this one and meeting some targets above 119.55. And the weekly targets were met 120.42. So again, this is one we've been staying off the short pedal on this. You've got a new profile that's appeared on your daily. The focus on former support was at 116.67 area, and now you got new support, which was actually met yesterday, or actually yesterday, yes, at 118.06. All right, and we reached a low yesterday at 118.14. So, again, small little profile. What does that mean? That means that more than likely you want to sit tight and look for breakouts outside of this profile. This profile just developed and locked in yesterday. We got a good, indication there on the bottom. But you more than likely want to sit tight, not do anything with the yen right now, and look for breakouts on the upside and obviously stop outs on the downside. Still not a big fan of looking at the yen from the short side, even though they come out with some decent fundamental news lately that would have caused the yen to go down. Okay, let's take a look at AXP. Somebody's asked me about that. I actually had it on my list to pull up, by the way, along with Kraft, actually. AXP. All right, so the long-term situation is this. That 83.32 was a big number. And there's the 82.78. So, and this is a good, if you're going to trade earnings announcements, you're going to be right 50% of the time over time. That's a fact. And I talk to a lot of guys when we run automated strategies. A lot of these funds will go, well, are you guys taking everything off the table before big announcements like a monthly unemployment report or like a Fed meeting? Are you sitting on the sidelines? A lot, but believe it or not, they're actually 50-50 on. A lot of them will go, God, we don't want to be in the market in any type of trade when there's big announcements coming out. And then the other half will go, well, you got to be in the market when those things come out, because their theory is, well, you got stops in place. Most of these markets that we're talking about running autos on are 24 hours a day, and they're not. You're usually able to get out of these trades by a stop if you're wrong, and therefore, actually, when we come back from the break, we're getting ready to go to break. I want to talk a little bit further about that, and then we're going to talk about why that's relevant to AXP.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. And I've got AXP up. And what I was talking about before the break was a lot of these guys that we talk to in the institutional world, when we work on autos for them or some kind of mousetrap, they're 50% of them will say, "Oh, you can't be in the market when these big announcements come out," and how the other half will say that you got to be in the market, you got to leave the stops in, and you could possibly miss a huge move. And on that note, most of the big moves in stocks actually do happen overnight when you can't get in or get out of the stocks, but it depends on your risk tolerance. I mean, I personally don't like to live that way. But if you're trading, not as leveraged, and these guys in the institutional world, only the craziest hedge funds are over leveraged, but they're fine with having the risk on of either announcements or overnight. And some of these guys are not, obviously, that I just spoke of, but their theory is it's defined risk by being able to get out of the market by way of a stop and huge upside. If you play either one of those games over time, you're going to, obviously, not being in the market when these announcements happen, you're going to miss good trades and actually get and not actually be subject to the downsides of some of those trades that you're not in. And if you're in the market, you're going to be 50-50 over time, a big winner, and 50-50 getting stopped out. So my personal opinion, and we talk about this all the time, is situations like this, an earnings announcement coming out, I generally don't like to be in those. I don't trade a lot of stocks in general personally. But that being said, let's just take two sides of this. if you're in this before the announcement and you're long, what do you do here? We obviously gap down and we rally back up to an inflection point, and a stock that was relatively weak, just looking at the broad sense here, and we had a trading opportunity from 82.78. We had to close above, and then we kind of ratcheted up, and the market kind of dragged this up. And again, I don't mean to just give you guys Monday morning quarterback situations, but looking at it as a relatively weak stock, and the market kind of elevated it lately on that torrid run up. And then we had the earnings announcements, and then it was a kind of a weak stock in a strong market, and we've got this 81.12 here, and now we're 78.08. And let's just take it from the side of the fence that somebody's still long this pre-earnings announcement. This particular day was a pretty damning situation, closing below profiles even after the sell-off. This is just not good news for longs. But what do you do now? It's basically okay to be short, not okay to be long. Even in this type of general market move up, it's okay to be short, not okay to be long, is the way I'm looking at AXP. And I don't see any areas down here to even start thinking about nibbling on for the long side. If you're not in the stock, I don't see a lot of green shoots, if you will, as far as profiles go, to start looking at this from, hey, it's time to back the truck up and get into AXP. When would that happen? When would that be something that I'd be looking towards? Let me just see where we are pre-market here. Pre-market, we're trading 77.61. The only way that I'd start looking at AXP from a long side now, or even doubling down on it, I guess, if you're in it beforehand, which I'm not a big fan of doubling down. And they use that term dollar cost averaging to make it kind of sound nice. It's doubling down. And that can get very dangerous. And remember, folks, anything can do anything. I mean, like, this could continue to go south till 50. I mean, everything's on the table. It could go even lower. I mean, who would have thought oil would have come off, from 150 down into 30 the other year? But it did. And that's amazing, and oil could still go lower. But anyway, going back to XP, there's not a lot of reasons to buy this down here, and sorry to ramble, but I don't believe in dollar cost averaging. So if you're going to play that game also, I don't think there's a reason yet to start playing that game, even to try to get back to break even on it. I don't know if that helps. Let's look at Kraft. So another one, some questions were on last week. I didn't get to it. Here we go. Okay to be short, not okay to be long. I think the resistance point on this is 65.57. Is there a reason to start nibbling on this? I think you've got better candidates to play around with. Just because something gaps down doesn't mean it's on sale. It's probably a low percentage when that happens, especially in a strong market, and they don't buy it up. I mean, if you see like a big key reversal kind of move in the stock on the action when that happens, that would be relatively positive. But that's not the situation here or on AXP. And that's just the way I'm looking at it. GRPN, I want to look at Groupon, GRPN. All right. This is going to be resistance, 811. Some guys were asking about this, 811 on Groupon. Don't see a lot of hope for this thing long term yet. I know we broke out, but we've got some major headwinds around that 811 area. We're trading back into 801 right now. So that's the situation on Groupon. I think you got much better long candidates here, and I actually think this could be a possible short candidate. I hate to short $8 stocks because you got $8 upside in it and maximum downside in it, but that's the situation on Groupon. I think you can find better candidates. I don't consider that a breakout situation at all at this stage. Closes up. Read some over here. Yeah, just got a comment about AXP again. Yeah, I think we need some more confirmations on that. I hear what you're saying. But again, from a kind of a imbalanced area, I don't see a lot of reasons to step in yet. It may be a time to do that at some point, by the way. So that's the situation on AXP. We'll take a look at Johnson & Johnson because we were kind of looking at some automated systems on this stock the other day. Again, we talked about this last week, hoping it would get back into 182 for a shorting opportunity. This is something also, some guys are asking, hey, what about Johnson & Johnson? You think it's time to buy this thing? No, it's in my opinion, technically speaking, it's not the time to buy this. You got some super mega headwinds around 100 to 102, and this stock has proved to be really susceptible to the dollar situation, amongst other things. And you can find better long candidates than Johnson & Johnson right now, just because it's pulled back. The only way that I would feel comfortable about getting back into this stock from the long side is if we closed above 102, and that's just not happening right now. Okay. We got to take a look at Apple. Let's see here, man. This thing's going to get super volatile now because as price goes higher, you start having, similar percent, just like the S&Ps right now. What are we trading? Almost 2,100 now. So when we were trading 1,000, a 20-point move was a big deal. And what is that? A 2% move. When we're at 2,100, a 40-point volatility situation on the S&Ps is the same as it was 20 at 1,000. So same as Apple, same concept there. You got to start looking at this with a lot more volatility in mind now. We've had the breakout above 119. That was the 120.51 and 119.75. Is this a time to short this stock because it's gone too high and the volatilities may get a little high up here? My answer to that is no. You don't have anything to glean hope off of from the short side, and you actually don't have anything to buy the thing up here because you don't have any new profiles appearing on the daily. This is also going to be information that is in the scanner that you can get, and you can get an indication when that may or may not be happening by going into this. And let me just get rid of that, and let me pull up the S&Ps. And as this populates, we'll be able to look at Apple. Should be right there. There it is. Greens across the board here, and there's no indications as of right now. This gives you real-time indications of where we may start having a new profile attempt to appear, and that would be an orange bar, just like ADM. All right. So ADM, I'm just going to pull that up really quick, just so you can get an idea. So the answer to Apple, just to sum it up, is some trailing stops are probably in order here on being long, and the 240s, we just don't have anything new happening here, and therefore this particular stock is telling us that there's no new balanced area that needs to be outputted. Now if we go into ADM and we look at what's going on here, ADM, hey, new weekly profile may be starting to appear here, and that would be new information. But ADM, as you can see, in a general sense, we've kind of used okay to be short, not okay to be long, and actually found a really good inflection point around 49.16 recently. So are there better long candidates here? Yes. Are we rattling around down here in the balanced area on the daily? Yeah, but I mean, relative to the market and all things considered, you've got better long opportunities, and 49.16, even with the move back up in the balanced area on the dailies, are going to have to be met with resistance selling. So again, just to point that out with the scanner, looking down at ADM. We talked about ADM the other day, actually, Tom and I. It was one of the stocks that was trading below, one of the only stocks trading below profiles. And there's ADM right there, and there's that new weekly profile attempting to appear. So you're going to have some new, strong, long-term information that you can use on ADM pretty soon. And based on that concept, Apple is not giving you any ideas about slowing down yet. We're going to take a look at Tesla. Juan and I were talking about this the other day. We're trading 2 at 580 right now, pre-market. But we were talking about, after Musk had come out and, said what he said, which is pretty making this stock relatively volatile in those statements. 193.70, we talked about that, and we actually got down to 193.28 and have bounced, 10 points off of that. Again, that's the balanced area on this, 193.70 up to 224.15 on the very long term. 213.89 is going to be resistance on this in the interim. And that's the way Tesla's looking. I mean, it's you got better long opportunities, but the good news is 193.70. You can orient long-term stops around that on Tesla. Does this stock and does this company have some more players coming into their space? Without question. But the guy's track record is pretty good. This is fundamental talk now, and you can orient stops around 193.70 as kind of like the Maginot line for this particular long situation. All right, we're going to take a look at the stock I used to really hate, Panera Bread. All right. $161.87. All right, that's the wishful thinking on the retracement back up on this particular stock, and you've got nothing to kind of hang on to here. And again, some guys were talking about this, and I'm pulling up kind of the nightmare situations for some folks in case some other people are in this thing and still hanging on to it. In my opinion, you don't have anything to hold on to here, and we had that 161.87 being breached after the announcement, actually gapping down and below there. So what do you do now? If you're long this, I don't see a lot of reasons to continue to hang on to this particular thing. I think you could. I mean, if you miss a couple of points and it rallies, relative to the risk that you can incur by hanging on to this and try to play that game, I'm going to say it nicely, the dollar cost averaging game. I think you've got a lot of risk relative to reward on this at this stage, and there's no way. And in fact, this profile that's appearing on our daily well above price action is extremely bearish. Okay, that means that we are just, we have nothing to glean information off of down here, and we could head a lot lower. So watch out for Panera Bread if you are considering continuing to buy or even trying to nibble down here. Let's just wait until we have some new information. And on a very short-term basis, even the 240s are appearing above price action here. 158.84, it's more than likely going to be some form of resistance on this as it was before. And if we can get back up into this balanced area, that would be the only time you need to start thinking about nibbling, even on the short-term basis. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back to the show. Somebody else said this is Nightmare Tuesday. We're looking at some stocks that have just gotten their head bashed in on some of these earnings situations. 1433 on Pier 1 imports. Again, we're trading 1252 pre. Actually, are we trading 1240 pre-market right now? So 1433, 1602. Again, what do you do with this thing if you're long? In my opinion, you could probably just sit on the sidelines and take a break from the butt whooping that this stock has taken, and just kind of wait for it to gather itself and have some new profiles possibly to key off of, and then orient some new stops around those profiles. Not a big fan of hanging on to situations like this, technically speaking, when they break down. I mean, and if you're not in the market on this and you're looking to go long, there's really nothing to go long based around down here, and you've got Navigator actually crossing this below zero on this particular stock also. So, there's better things to get into out there other than Pier 1 imports right now. And again, if you're long, you could sit tight and just kind of take a break and get some sleep for a change, and wait for some new profiles to appear, basically. Some big guys were asking about Nadex earlier, and there's Nadex is for U.S. citizens, and then you got if you look online and Google binary options, you got like a zillion people getting into this game now. One of the companies, GL in Europe, I think is the parent company of the Nadex situation in Chicago. and you can trade a lot more products. But I don't think as a U.S. citizen you can actually open an account with somebody like GL. And somebody was asking about, they had some Nadex or binary options on Apple, and basically the question was where do you think this thing's headed? Because I'm in some binary options on Apple, and I'm going to trade some weekly binaries on this stock. I love what Daryl Martin does. I think he's got a great product with that scanner, and I just think that's a really unique thing that he's developed there. But my personal opinion trading binary options is I have to, and I torched about $500 or $1,000 one time really quick, because you get involved with the 5-minute plays and blah blah blah, and it just kind of gets out of. For me, I can't. I was basically just testing it out, and I'm not immune to losing money trading, by the way. But figuring everything out and getting the temperament of how I would react with money on the line, not some theoretical demo account. For me, I've actually ended up making money on Nadex by basically trading more of the longer term plays and looking at something, finding the technical setup, and then basically not looking at it anymore and doing the, it's a binary option. It's not like a roulette wheel, but it's something where I'd have actually done better by looking at the longer term setups and then kind of letting the trade unfold one way or the other and not getting involved with tinkering with it too much. So Apple, a similar situation, based on what we talked about earlier, is something where I think the leverage is still on the long side, and there's really nothing standing in the way of this to move higher at this stage, if that makes sense. All right, guys, just to sum up the S&Ps before we take we're actually going to end the show in about 15 seconds here. Here's the situation. Short-term numbers 2082.83 and 2093.65. Let's call it 2094. That's going to, and we got a relatively thin profile up here, so we could break up or break down one way or the other. I don't know if trading inside this profile is going to be your best leverage today. Thanks very much, guys. We'll pick it back up again tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.